Good morning and welcome back to the Opportunistic Trader for October 2nd, Tuesday. Should be an exciting one, I hope. We should probably be in another place in the world to get volatility, Vince. All other markets around the globe are pretty volatile. A lot of news out there, stemming from Italy, dollar-related stuff, Asia, all of that. Markets are, lower across the board. S&P rallied back half the move. It's funny. Whenever the S&P is down 10 or 12, it looks like we could go down 25, 30, and then they bring it back to -5, and then the day stops and it's over. So
I wonder if their sell algos at 2% lower. But anyway, I don't want to get you off topic.
Yeah, well, we haven't had a 1% day since June, and I think we might have had one. I mean, we literally don't move. So that being said, last night in Asia, markets were lower. Nikkei was down a little over 1%, and smaller a little bit across China and Hong Kong. And looking at the European markets, DAX is down 70 basis points or 86 points. It keeps going down. It's almost like the British pound. It keeps going down at 12,000 and then back to 12.5 and then 12,000 and back to 12.5. And then we're at 12.2, down 84, about 60 points off the low. And we'll keep an eye on that. I think the news out of there is related to Italian bonds, same type of mantra. With debt over there, the dollar is doing much better, and I'm happy to say, I got to go look exactly to see where it is. The British pound is not in the 130 handle. It's still in a 129 handle, but it's 129.59. So at least
it's a breakout. I'm buying straddles right now, and you're fading them.
I'm not doing anything in the British pound, but
I hear you.
I do think it probably goes lower. But we've been stuck between 129 and 131 for the entire most of the year. But the dollar is much, much stronger across the board. The euro is trading at 115.39. If it gets into the 114 handle, we might have some slippage down. We haven't been in that handle in a very long time, so we'll keep an eye on that. As far as my trading, I want to hide, so I don't really want to talk much about it, but I will beat myself up. I'm still short the S&P. I think my level with options is around 9 handles from here, a lot better than we were yesterday. I believe this trade will be a pretty big winner at some point in the next couple of days. We're going to utilize options Wednesday and Friday to bring in some premium against that position. The trade that's a little away from us is oil. We're down probably about $1.80 on that trade, which is too much for us, but we put an upside stop with a little bit of room. I think the trade is very long here. I think Hedges were a little bit long, and now they're maxed out. So, if the market comes in a couple of dollars, it could get hit, below 70. But again, there's a lot of news in that market, so we'll keep our eye on that. But at least we're stopped out to the upside. And on the equity front, we really don't have much going on. I'm going to look to do some stuff in equities today. The FAANG across the board looks lower, nothing significant, anywhere from 15 basis points to under 1%. So quite across the board. I'm noticing some of these financials don't look great. So it'll be interesting to see how they hold up in the market going forward here. And as far as looking at the straddle, not an expiration day. The straddle is trading somewhere around 13.5, which is not really too much for a couple of days. But, later in the week, we have non-farm on Friday. And today we have PAL we don't think it's going to be market moving, but you just never know. He's speaking. It's coming right out of a Fed meeting, so I don't think, he's going to have much to say different than he did a week ago or less. That's sort of, what I see. Oh, gold is up $5, back up to about, 1,200, and, that's what I'm seeing from the perch here this morning. Do you have any thoughts, Vince?
Not really on precious metals. We covered a lot of that earlier. But and I know that you were listening in. I think gold. I think it is kind of, if you're looking at, you don't want to make too much of a big deal out of this, but gold is higher as the dollar is higher, and we haven't really seen that in a while. For the last week, behaviorally, and I'll translate that into an actively trading scenario. But for the last week, gold has been underperforming when the dollar's been weaker, and meaning not rallying much, and getting slammed a lot quicker when the dollar is up. So here we have a situation where the dollar is firmer and gold is a little bit firmer. So whether you want to fade it or buy it, you want to look for it to get above 1198 and stabilize for a second or two before you trade momentum. Otherwise, you would probably sell it back as it went back under 1198. So the range today is 1192 to 1198. Below that area, you make a decision to either trade the range or go with momentum. That's what I have on my radar.
I don't think we're getting there. I mean, this thing is just dead as a doornail. But
no argument.
I don't want to spend too much time.
Can I circle back to one other thing?
Mm-hmm.
You started the show off, talking about the risk, the positions you have on, and what you're doing to mitigate that. I think active traders, and I'm speaking for myself here. For me, when I find that it's taking up mental bandwidth that I can't concentrate on other opportunities, I'll cut a position in half, or I'll put an option on, or I'll reduce an option risk, or I'll do something so that I can focus on what I have to do, and the problem, if I have a problem, self repairs. I think all traders active traders should bear witness, and it sounds like a religious revivalist there, but all active traders, right? Exactly. Praise, whatever.
Bear witness.
Bear witness to this.
Listen to me, but let me just, state it. The bottom line is, it's not a great trade. I'm not happy with myself, but I'm a little bit convicted on this trade, and I do think that we're going to trade lower. It's interesting. We started the new quarter. There was stock to buy. They came up with this BS NAFTA thing is the reason why we were buying. Market failed off the tops again yesterday. And this morning we were down at 17.5 on the E-mini. And at that point, I'm almost like even on this particular trade.
Right.
And, then we bounce 8-10 handles. But I do think something negative is coming into the tape here. It just doesn't feel right.
I'm not disagreeing with what you're doing. I'm just trying to explain to other people how I would how the point is.
Well, I disagree with myself because I like to be much shorter.
And I understand that. Like, you're actually letting people have a view inside your mind. But what I'm saying, and not contradicting you, and at the same time, everybody handles their own bandwidth, different ways. And so I think a trader who has a position on that has a predetermined stop is one way to handle it. Another way to handle it is, this is a conviction trade. I really like it. But you find yourself getting a little bit of a knot in your stomach. I'm speaking for myself. When I find myself getting a little bit of a knot in the stomach, I have to do something. Maybe it's buy a call like you did, maybe it's position. But every trader should be very aware of their own emotions when they start to cloud their logic, because they need to free up that mental capacity to see the other opportunities, especially if you're an active trader in and out of equities.
Well, that's it's called the opportunity loss. So for me, as a very active trader, I have an opinion in the S&P. I want to see or try to hold in till it plays out, and once it plays out, then we can get bigger in the position potentially, depending on what we feel like. But by utilizing an upside call, you know what your risk is. I mean, and
Right.
again, nobody wants to lose 35, 40 handles on E-mini S&Ps, especially when we're trading for, 8, 6, 10. So, that being said, we're back in the range on that trade. The oil trade is going to take a little bit longer, I think, but I do think it's a good trade. But again, it's something that I always want to talk about. It's called, cost value of opportunity, I guess you'd look at it. So, I still will try to scalp some S&Ps potentially, or even oil, but I'm not as active as what I would be, churning, buys and sells, because, I'm in these positions and, I'm hoping and I'm thinking that they're going to work. So, people that have actually worked with me that are on the site or know me, they know sort of how I do it. So, tomorrow we'll sell some more put options. So our cost, let's say in S&P, is up to 14. If I sell options at $2 or $3 and don't get called out, now my price is up to 17. And then I do it again
Right.
Friday, it's up to 20. And
Right.
and you're just financing positions against,
Right.
and then you have the top side. But again, I don't like this stuff because I'd rather be active. I'd rather come in today, scalp out $5 3 times, and dance around my office
Well,
and be happy. But what's happened here is we've gone up to a level. We've come in a couple of times. We haven't broke 2,900 on the E-mini. I think that's a critical area, and I think that's an add a position area. But right now we're at 26, so we're not near that. They took the whole day away today. The S&P was down basically 11 or 12, and now nothing's happening. So
I know.
But I will say, and I really want to discuss this with you because I don't know if you focus on this stuff, but what's interesting to me is there's a little bit of a breakdown in different groups, and yesterday it was all small cap. And if you look at the Russell was down almost 1.35%. And, no one's really looking at that and no one's talking about it, but that doesn't trade well. And when that doesn't trade well, usually that holds us in to the upside. And, like yesterday, the NASDAQ composite was down. The NASDAQ futures were up. The Dow came in 150 points. The S&P closed up 7 or 8.
Right.
But really on the month or on this new quarter, the S&P is only up 4 or 5 handles and actually was down this morning. So it's going to be interesting. The month is going to be interesting, and we'll have to see.
No, I think it's going to be a great month. I just wanted to just put out there the different ways that people can mitigate their own brain power so they can use it for other trades. And sophisticated traders will use options, and more simplistic traders will just lighten their position or put stops in. And it's important to have your own discipline, whatever it may be, to manage your risk so you can move on. So now, and so now you can look at opportunities.
Well, I utilize stops, but utilizing the call is an interesting thought, only because what happens is your stop out level, and then you can stay in the position. Like some of these options are multiple weeks out, especially in oil. So now I know no matter what happens today, obviously if it goes higher and I'm short, I'm going to lose money, but I'm not going to lose a lot of money. And it gives me the ability, in a market that we were talking literally every day, less than a month ago, was trading at $66 and we were bullish and there was no bid. So, now we're $76 and it's all bid. So that's the way these markets work. And, it's interesting. And, especially in oil, like Trump thought oil was too high when it crossed 60. Now it's 75. So I don't know. He must think it's really, really high. And at some point, it's going to have an effect on the economy. I would think. And
yes, it absolutely has to. The prices at the pump are starting to go up, and we're going into heating oil season. That's going to start being factor into the market. I agree with you. So, I'm just saying, actually, on topic, you were talking about the Russell and the Nasdaq. Mike and I were talking before the gold fix one, and we were looking at some of the smaller caps and actually the Russell and Nasdaq, and I don't know. We just saw the behavior start to change a little bit. I saw them as moving more in unison, as opposed to diverging. Apple versus Amazon yesterday, and to me that was a sign that people are now moving in mass in and out of sectors again. So maybe it's a rotation, like a distribution near the top of a market. That's all. That's just something I noticed.
Wow, I'm looking at FXI. That thing is down almost 3% today. That's indication of China. I don't think their market was down. Here, I'll check it out, but I don't think their market was
But
down.
the Shanghai Composite is up 1%.
No, I think it was closed for a holiday. So I guess
it's catching up.
Well, no, when they open, it'll just open down whatever it is, basis where we're trading, which is down 2.5%. So, it'll be interesting.
Right. I'm sorry. The composite.
The cash will be down, but
Right.
It doesn't really have much impact. It was interesting. I got a call yesterday from CNBC, and we were chatting, and they were asking me, thoughts on, the foreign markets, the MSCI versus the S&P, and all these divergences, and it was just an interesting conversation. And really, that's where the play is. Is Europe going to narrow their losses versus the U.S.? That came up about 1.5%, 2%, as well as Asia over the last couple of weeks. So it'll be interesting to see. It looks like it's going to trend back down to the lows. I don't know if it'll have a market impact on the U.S. market as much. And these emerging markets look like they're going to hit lows again, which, is an amazing thing that the S&P is holding up. But, that's what everybody, for whatever reason, is looking at. They're looking at these divergences between markets in the U.S., between different markets, as well as the world in itself, where the DAX is now back down about 6%, and we're up 9%. So,
Right.
There's a huge disparity there. And then across Asia, ex-Japan, which is up now 1% or 2%, but Hang Seng and Shanghai down anywhere from 12 to 15%, and our markets being up 9%. So,
Larry, I don't want to interrupt. I do want to interrupt because it's one of our subscribers, one of our members. He's got an active trading question for today. Can I break in with what that is?
sure.
You don't buy the dip. He's saying, what level would you add to your short? I think he's referring to the S&P. And the next question was, what indicator today do you think is the leading or most important one that you would watch?
Great question. Great
Right?
question. So as far as adding to the position, I would add to the position on a break below 2,900. We're less than 1% from there, but as we know, an eternity from there. So I don't think, unless something goes on and the market trades heavy, that there'll be an add today. And as far as what am I looking at today, I'm looking at relative strength versus other markets on the U.S. So, watching watching European markets potentially, and watching currency markets to get a cue, and then to see if the S&P is trading relatively strong versus those markets. And it almost works as a reverse. So when the DAX ticks down, and the S&P goes down a little, as soon as the DAX ticks back up, we go up and make a higher high. So I'm keeping an eye on that in itself, and obviously watching oil, watching the bond market. The bond market caught another little bit of a bid here. It's interesting. We keep now going to about 311 on the 10-year, and then bouncing back to 307.
And
So
$3 is the new support. You know what I mean? 3%. I mean, is the new support. So it's going to start taking a toll.
Yeah, I listen. I talked to some friends that are involved in the lending end of the housing market, and they're saying it's tight. You know, mortgages are now in the fives or close to fives. I mean, at some point, this is going to take a whole toll on the market. And you know, we looked at it, and the Fed is about 95 or 98 going in December. So it's going to be interesting to see.
Wait, 95, 90, you mean percent chance of raising?
Yeah.
Is that what you mean?
Yes.
Yeah. Okay.
95%
I'm just
chance.
clarifying for the
Yeah.
audience.
95% chance, 95 on Fed funds. So, you know, they're going to go again, and we'll be at 2.575. And I think the 10-year could be 3.25 a half. I mean, at some point, this is going to have an effect on the market, you know, as easy money goes away. And, you know, it was interesting. Tony was talking, and he was basically saying, you know, all these big hedge fund guys are waiting for the next rate rise, and they think the market could come off. They thought it would come off of this, but it didn't. But maybe the next one, you know.
It's funny you said that. I talked to a friend of mine who's in California real estate. He's a mortgage guy, a mortgage banker, and he said his rates after the Fed raised, his mortgage rates actually lowered a little bit. And
really, I didn't see
yeah.
that.
Well, no, but I'm saying, but I didn't understand it, you know, and I didn't pursue it further to say, well, what are we talking about here? A floating rate? Is it some sort of a
No, I think
a
all
teaser
rates
type
are
of thing?
rising
But
across
no,
the board.
he was. I think the whole flattener concept was part of what he was talking about. I don't see that lasting long. I'm just look. I just think back to what you're looking at today. So you're looking at correlations, not necessarily.
I'm always looking at
rates.
correlations between different markets and trying to get the cues. But the one thing that's interesting, you know, and what's changed so much is the algorithm is almost like it's a trick, you know, so you got to watch
Right.
the tricks. It's like, you know, it's like watching a football game and seeing, like, you know, like a triple reverse. Every day in this market is a triple reverse. You know, it's
Right.
they, you know, basically have everything look a certain way and go another way. And like what you're seeing is, and you saw it yesterday with NAFTA. Okay, we never really sold off because NAFTA wasn't going through, because they knew NAFTA was going to go through. And then when it
Right.
goes through and no one even knows what the new NAFTA is or if it's good or bad, it's always good because they did a deal and they don't have to worry about it.
Well,
And the funny thing is, I don't understand. Like, Trump just does deals to do them, and I don't even know what. Nobody can tell me what's great about the deal. Is it great because we're not bothering them anymore, or is it a great deal?
Well, I mean, yeah, it's great because it's closure. I think that the bottom line is it's less uncertainty tied to Trump. You know what I mean? I've looked at it, and we don't have, you know, as active traders, we're not going to go into the details, except that it's pretty much we gave some concessions away to get. It's a NAFTA-like deal, and we actually gave some concessions away that we were asking for. You know, that's all I'm going to say about it. But what I wanted to ask was, you were talking about, you know, on buy the dips question, you were talking about looking at, say, you know, the DAX and the S&P. Maybe one may lead, maybe one may lag or bounce. What about internally today? Like, do you think, like, if you were bearish on the S&P, would you be? Let's say I'm bearish on the. Let's say I have no opinion on the S&P, and would you see the Nasdaq? You think on this whole rotation thing that's going on, lead or follow?
You're not going to know that until after the opening, but it'll show its color right away. So
right. Which goes to the algo point.
Well, it's all algo. So today might be a sell Nasdaq all day, buy Dow. You know, or sell Dow, buy Nasdaq, or you know, so it's all computers. I don't understand it. You know, I don't understand how it links, but it goes all day, and then the next day it doesn't have anything to do with the day before. So, you know, right now I can't tell you, you know. what's going to
Druckenmiller
happen.
spoke very recently on this exact point, and uh, he said kind of what you're saying. Actually, he said what you're saying. His conclusion is your conclusion. I think the takeaway from what I read was he said price cues from news are no longer something that I can rely on, and uh, he said it seems as if, and I think this was very insightful if I'm not saying it right. He said it seems, look, the algorithms on top of the Fed have basically distorted the relationships between price cues and news, and so I have, traditionally I'm now ignoring news more and paying attention more to my insights and technical analysis, because what is left to do except pay attention to your insights, technical analysis, if price cues don't matter anymore? If you know, how would a market react to news? It doesn't mean anything because the algos are doing what they do, and all the algos are buy algos in the S&P. Was his conclusion, and you don't see any sell algos until we go -2%. Like those are almost quotes from him. So everything he said is kind of what you said in different
Well,
ways.
in a way, he also said that one of these rate rises, he thought it would be this one, was going to send the market down 5 to 15%.
Right.
So maybe it's the next one, but at some point, we don't have easy money. The Fed is tight. The Fed is probably too tight, really, for the market where it is, and the environment. The environment's very fragile. I mean, I've been reading a lot of stuff on New York City real estate blowing up. As far as blowing up, I don't mean like crashing like it did in '09, but coming in the $5 to $15 million apartment level to where there are no sales, and a lot of people are renting. I don't understand why that's the case, other than maybe rates are high because the markets are at the highs, and these home builders, and Tony's been amazing on this, have gotten annihilated. So something smells outside the market. It's not affecting the E-mini S&P because it never does. But things are choppy, in general.
I want to go on the record as saying that I think that whenever the sell-off comes in the equity market in the U.S., the protracted sell-off, I really think it's going to be triggered outside of the U.S.
It'll be what? It'll be triggered outside the U.S.?
Yeah, I think.
Why? Though?
I'm not saying. Okay,
but I'm not
understanding
why. Everything is a catalyst to go higher. So all of a sudden, if they start talking about Italian bonds or the Italian deficit, that market will do whatever, and then they'll fix that market, and the market will go higher.
Here's the answer to that. Your comment about fragility is what I'm getting at. The Fed has, the economy is not as robust as it looks. The Fed may have, may be pushing the pedal a little bit too hard. And I think an exogenous event at some point is going to create the perception like, look, there is contagion. It's not here. And as you say, the market keeps rejecting what's going on outside of the U.S. And I think it ignores what's going outside the U.S. The Fed keeps doing what it's doing. And I think there's going to be a tipping point, and the event that makes the Fed have to back off on raising rates or actually lower rates is going to be an external event. And I think I don't have a strong feeling on where it's coming from. I think it's going to come from Europe, and I think we will suffer because of the aggressiveness of the Fed for the last 6 months. So we set the table for an exogenous event to actually affect us. That's what I'm saying. I think there's a problem in Europe, and the Fed has over tightened, and we can't take it. That's what I'm saying.
Okay. I mean, I'm not gonna, disagree. I'm not gonna agree because I just see what the tape is giving you. It's all BS noise. It doesn't matter if Greece blows up.
I'm talking about a bias for swing trading.
But what is the event? You're saying,
I don't know.
have an event, and it's going
I don't know what the event
it's going to be an outside event, and it's coming in another market other than our market.
But
what I'm telling you is none of these markets are affected or affecting our market.
No,
It's
we
the
are an island.
opposite.
We've joked about that before. We are an island in terms of stocks and economy. I'm just saying that the Fed is setting the table for some event. The Fed can control our markets as much as they want, and I don't mean that in a manipulative way. The Fed can manage our markets as much as it wants, and I think they're just being too aggressive. I'm saying that they're setting the table for an exogenous event, for an outside event to actually, they're putting too much on, and something like, for example, I don't have, what the answer is, but something in Europe, like there's a lot on the plate in Europe, and if there's a problem with
But there's been, listen, there's been problems since 2011.
I know.
But what I'm
I
saying
agree.
is, but
I'm
okay,
talking about the
so
new
you
norm of
literally had,
problems.
right, but you literally had Greece blow up. You've had Italy
Right.
blow up. You've had problems in Spain. You've had, you have a problem with a single currency with, 20 different countries, okay, using the same
Oh, these are all the
currency.
new normal, Larry. I'm talking about something like a continent falling into the ocean. Okay, I'm talking about something that's bigger than like everything that happens all the time that the markets just shake off. I agree with you. It doesn't make sense.
But I think it's different. I think it's coming from here. I think whenever we correct, which is natural, going down 10% after going up 2,000% is not a big deal.
Right.
The market can't handle that for sure. Okay, can't handle going down for 2 days in a row. But that being said, I don't see a particular event, or I can't even envision what event we're even looking at or talking about.
Right.
I mean,
Right.
we tariffed China, once for real, I guess, and one other time. Nothing happened there. Now everybody's like, we're going to do a deal with China. I mean, okay, but it's been months and months and months that we haven't done a deal. The tariffs are in place, and nothing has really happened in the market other than the market going higher. So everyone was scared of the tariffs. We put the tariffs on. Everyone was like, when they put these tariffs on, the market's going to crash. Well, the market not only didn't crash, it went up and made a new high. So what
will it take? That's a question
I
I
don't
ask
know. I
myself.
mean,
What will it take for our markets to make noise?
well, I think the election.
What will it take? And I don't
well,
know the
I think
answer.
he's going to lose everything. So when he loses everything, he's not going to be able to spend the next 2 years doing anything. So I think that puts a damper
Well, then
on his agenda.
that's a domestic concern. I think
Right.
I think you're right about that.
Well,
that's possible.
that's where I think it's coming from. But again, it's just my
Right.
opinion, and
Okay.
I don't know if he's going to lose, or not him, but the Republicans, that I don't know. But I just don't see an event. And again, you never know. But let me ask you a question. Okay, let's say you woke up, it's a week from today, and they come up with some BS
Right.
that Italy's blowing up, or Spain is blowing up, or there's an issue with Brexit. How is that even moving our market? It's actually a joke. People laugh at it. People laugh.
Can I tell you what's going to happen when I wake?
Like joke.
Come on, Larry. I'm going to play into this. I'm going to wake up and I'm going to hear that news. And I'm going to say, so nothing's going on, and
no,
nothing.
Listen to me. Nothing
and
is
it's
going on.
just an opinion. Nothing will happen, and then something stupid will happen, and the market will react.
Listen,
and
Vince.
That's what I'm saying. I'm not betting on it.
I understand, but before we even go down, you got to have a 1% down day, and if we had a 1% down day, that's 30 S&P handles. People would be wiped out on a 30 handle move. Wiped out. You'd wipe people out. I'm telling you. So
I know.
I
guess
really
what I'm getting at is I think the
mean,
liquidity is not real.
Well, I think the liquidity is really real, and I think a little bit. It's funny you touch on liquidity. I would tell you that a lot of the reason why we don't move and nothing really happens here is because of the liquidity. The liquidity is so big at every level that you can't maneuver the market. You can't push the market around. Market can't be pushed around by any players because the algorithm is bigger than all players combined. It's a bunch of
right.
Listen, when I do an order execution, and Michael vouch for this, okay, if I try to sell 200 E-mini S&Ps or whatever the number is, okay? You know how many separate fills I get on a 200 lot? 200 lot. How many fills do you think it takes to fill a 200 lot? How many orders?
I mean, and you would think it's like,
you would think it's
fills,
one.
It's probably like one.
No,
right.
It's like 175 one lots and a couple of two lots. I'm telling you, you can't hit a bid and watch it be 200, 400, 150. It's freaking a bunch of one lot computers, and it's hundreds of them on every trade. So that's a lot of the reason when you want to understand and look at markets, that's a lot of the reason that these markets can't maneuver or can't go. And like Druck said, you need a 2% down day. Listen, I'm not even saying you need a 2. If you had a 1% down day, we're at 29.25 and we get up tomorrow morning and we're under 2,900, we're going to have a lot to talk about because the market will be in a burning fire. Okay. Right. So, that being said, and what's funny about it also is if we go down to 28.60, 70, that's going to take out 2-3 months. People will be getting murdered. And that's like a 1.2% move. So, this is the problem. The problem is there's liquidity all over the place. People, it's all computers, computer on top of computer trying to, get the edge. It's interesting. These algos can't be doing all that well. I don't know if you know Vinny Viola, at Virtu. I mean, his stock is destroyed. I mean, because there's no edge.
I actually talked to an HFT, one of the biggest HFT traders out there, and he said to me, they're going away from black boxes. I'm like, what do you mean? He goes, because it's become a low-cost producer game, and we're just cannibalizing each other, to your point.
And maybe, maybe it's time, to look away from that at this point. But again, looking at it, that's a lot of the reason why a 10-handle spoon move becomes big, because we don't ever move, so we're down 14 basis points today. Okay. The DAX is down 70. The Nikkei is down 1.25%, and China, which isn't open, is down 2. So we're not, we're basically not able to move, and we will move once we have that 1% down day. Then we're going to rock and roll.
One thing I just wanted to chime in with, I'm actually reading something right now from Deutsche Bank that's basically saying yesterday's move in small caps versus the S&P was a 4 standard deviation differential, and it was the big caps versus the small caps underperformance was the largest move in 3 years between those two. And the IWM, which is the small caps, the volume was roughly 60% above the moving average. So, something to keep an eye on.
Yeah, I don't know what it does. They'll probably buy that later today and sell S&P. Who knows? The whole game now, unfortunately, and it's been this way maybe about a month, is to just figure out what index they're going to buy. You don't know today if they're going to come and buy the S&P, the NASDAQ, what's going to outperform. To me, just looking at it, I think the NASDAQ will underperform today. It usually does on a down day. But again, woke up this morning, the S&P was trading at 19, down about 10, looked skittish, drive in my car to work, which is only about 10 minutes. And by the time I got here, it was down 6, and then the day was shot. So, they brought it back in line. We'll see the underperformance. We'll see if it lasts. The
other thing I wanted to chime in with while we're talking here, Tesla's come out with some news. It released all of its information here, and so their Q3 deliveries totaled 83,500 vehicles. It's just a hot topic right now. And Tesla went from trading about down 5 or 6 to actually up 5 or 6. Now we're back to flat. But it seemed like initial reaction to those headlines of what they actually produced and profitability things. It caused about a $10 move, but that's obviously going to be moving a lot throughout the day. A lot more headlines come on that one.
Yeah, but $10 is like nothing in that name. And guess where it is? It's at 309, exactly where it was when we were talking about it before the Musk news hit. The stock went down 47, and then yesterday it was up 43. You know, I don't really want to touch too much on that, but I'm shocked that the SEC settled with him. You know, what he did is so illegal that, you know, many people have gone to jail for that, and they settled with him for $20 million. It's a joke, you know. So he's out of the woods, but, you know, he can't stop tweeting and, you know, doing all that stuff. So it's just a matter of time before, you know, he comes back out. You know, that's my thought on that. I don't really have an opinion on the stock. Do you?
No, just I just hear opinions of fund managers that are very upset. We put a piece up yesterday on one guy who's getting involved in a class action suit. So you know, I don't really have an opinion on Tesla. I just have an opinion on the man. I have an opinion on what the government did. The government can't admit that, you know, they had to get it off their table because it's a lot. It's, you know, it's who you know, and they had invested a lot of money in him, so they couldn't really hammer him too much publicly. I think it's a matter of saving face for the government. But yeah, I think he may be a genius and an entrepreneur, but he's not a businessman. But he didn't get what he deserved. Let's put it that way.
Yeah, I don't know.
Regarding trade ideas, that kind of is a lead into 1:30 or 1 o'clock today. Tom McEntee has been very active with Tesla options, so I'm sure he'll take a look at that today at 1 o'clock when he joins us.
Yeah, it should be interesting. Should be interesting, but the stock is not moving. It's crazy. I'm looking at the tape, and it's just so dead. It's and the funny thing is, it's beginning of the quarter. Beginning of the month, they ramped up, they failed, they're back down around unchanged for the month or for the week. It's only 2 days, but you know, people should be a little bit cautious here into the end of this month. We have a number of different things that, you know, we're looking at that don't look great, but again, market holds up well. We haven't had that 1% down day. If we get a 1% down day, it's gonna 1% now is 29 handles plus. I mean, we haven't had a 20. When was the last time we had a 29 handle day, Mike? Got to be. I'm putting him on the spot, but it's got to be a long time especially on a settlement basis. I don't even remember.
Well, settlement basis or intraday range, because I think just.
Oh, well, we moved 20 handles yesterday. We moved 20 handles every day. But, you know, I'm talking on a settlement basis, 1%. I mean,
1%. 1% on a settlement basis, we're going back to June.
Yeah. I don't even know if we had one in June. They said June.
It was June.
All right,
Guys,
so June.
The dollar is stronger, and gold just popped above a resistance level. So something's going on. And I think it might be related to the British pound. Gold's trading 1201 now, and the dollar really hasn't backed off.
Might be related to the Vince Lancy weekend article.
Yeah, dude.
There
You're
you go.
moving
There you
gold
go.
right
Actually,
now,
I know
kid.
I'm sorry, the dollar is softening up right now, and gold is rallying, I think, disproportionately. Thank you for the compliment. But
I mean, when you do look at it, that is a good point, because euro, it's not popping. I mean, euro's at 115.40. It's a few pips off the low, but you know,
so what is the
dollar?
dollar?
29.70. So it's really a gold move here. I don't really see, you know, pretty good strength in gold relative to the dollar.
Right, above 1198. I would look for 1208. I don't have a trade on. I didn't get we're above 1201 now. See, I'm not going to be able to participate in this unless we get a pullback. But it's an active.
Don't worry,
we talked about it earlier today. It's an actively traded market for the last couple of days, and we might have.
Well,
a nice
listen,
range
I'm looking at stuff across the board. I'm shocked that the S&P is only down 5 handles. I mean, I see the EEM; they're all down 1.5% to 2.5% plus, and you know, the market just sits, and there's really not a lot going on. So, you know, we'll see. We'll see after the opening how everything looks. I'd like to be a little bit active in the options, maybe setting some stuff up for tomorrow's expiration. Again, you know, short the S&P, short oil. You know, not feeling great about the oil as much as I'm feeling a little confident in S&P. You know, down about 10 handles on it. Going to finance it a little bit, and that's sort of my takeaway from this morning. Just looking Micron, these techs are down pretty decently. Some of these second tier techs, 1.5% to 2%. The bigger ones aren't down very much. The FAANG, but overall the market feels a little bit heavy. We'll see how it trades during the day. I'm sure it'll trade around and all of that. But we'll watch 17 on the downside today. If it takes that out, it'll be down on the month and it'll be on the low of the month. So we'll watch the low that was put in this morning. Doesn't look like we're going to get there, but you never know. And that's my thoughts for this morning. Do you have any closing thoughts?
No, I'm just looking for which dollar pair is the driver right now. What's moving, because the dollar is a little bit weaker, and it looks like it's the yen as opposed to the euro. So my only closing thoughts are I think this week's going to be a good trading week. How's that?
We always hope so.
Well, I think my takeaway is there's a lot of liquidity out there, to your point, and I just think it'll remain out there until I need it. That's my paranoia.
Well, I appreciate you joining me as always. I just want to quickly run down the schedule. We have Joe Vaklovic coming on right after us discussing the action in the ag market. Then at 10 o'clock, Tony Greer comes on from TG Macro discussing equities and his themes in the equity market. Then I'll be on at 11 in a Q&A for anyone that has any questions, and then just go over just markets, where everything is, and any types of updates to positions and thoughts. And then Joe Vaklovic at 12:30 will be joining us discussing grains and the ag markets again. And you could ask him any questions, especially for people that are interested in trading grains. And then at 1 o'clock, Tommy Mack is going to be on, Tom McEntee, talking option trades and setups, risk reward. As Mike mentioned, interested to see if there's any kind of skew or any kind of trades to put on in Tesla. I'll be asking him because I'm interested in that stock. And that's our schedule for today. We'll all be in the chats, giving ideas, thoughts, and market analysis. And I wish everybody a great trading day, and I'm hoping we get some action today. Vince, thanks for joining us, and we'll pick it up. We'll pick it up tomorrow morning.
In the room.
8. We'll pick it up, me and you, live on the air, 8 o'clock every day. So we'll pick it up on my show. I'm a little jealous of your show because your ratings are higher than mine. No, I'm only kidding.
That's because I have dogs and children that I pay to tune in. But that's not true, obviously.
No.
I think I have a capacity crowd of like 20.
No, you're doing great. You're doing great. So I appreciate you joining me every morning. I'm hoping that we're giving good content and thoughts to the membership, and that's sort of it.
Amen.
All right. Listen, good luck today, everybody, and we'll see you in the chat.
All right. Thank you.